We're going to do a recap of the U.S. equity markets for 2024 in under 5 minutes. Hi, this is Steve Rumsey, Chief Investment Officer of Optimus Advisory Group. Let's get to it. Okay, this is our leaderboard graph. This is where we take small, mid, large, growth value blend, low volatility to high beta, and everything in between indexes, put them all in one graph so we can analyze, deep dive what happened in the markets. So let's get to it. So S&P 500, bright blue bar in the middle, up 25% for the year. Very strong results. The NASDAQ 100 lagged the S&P for most of the year, but ended up beating it up around 26% for the year. But I know you're looking at that long blue bar at the top. What is that? That's the S&P 500 Momentum Index. And I know what you're thinking. Well, yeah, if you put all your Magnificent Seven stocks and 90% tech in an index, of course it's going to be up 45% plus for the year, but that's not actually what it did. Matter of fact, at the end of the year, it only had around 23% in tech. Had a big chunk in large financial services companies, but this thing was strong the entire year, did it through diversification, not heavy tech investing, and look at those results. The sister strategy right below that, mid-cap momentum. Similar story, but with a twist. This ended up with 7% tech at the end of the year. Well, how did it do that? What had 29% industrials, very diversified and very strong throughout the entire year. Again, up 38% for the year. This was fantastic. Well, how about the bottom of the barrel? Russell 2000 value, not the place to be in 2024. Why? Financial services and real estate stocks made up 40% of that index at the end of the year. Those were not good places to be. But bottom of the barrel, worst of the worst, NASDAQ 100 equal weight. Now, why is this important to look at? Well, if the NASDAQ 100 was up 26% for the year, but the equal weight version was only up 7, that's not a broad-based market. And we were waiting for the market to broaden out all year, but it didn't. Thank God we actually ended up with really good results for the year with the S&P being up 25%, but it didn't look good for the equally weighted stock baskets out there. Anyway, how about fourth quarter? Russell Midcap Growth. This thing was up 8% for the quarter. Now keep in mind the S&P was only up around 2.25 for the quarter. So this was very strong, and it did it with the usual suspects, 33% technology, and it also had a big chunk in industrials. But what happened to the S&P 500 High Dividend Index? That was definitely not the place to be in the fourth quarter. Why? Same story. Real estate and financial services made up 40% of the benchmark. Not the place to be in 2024. So I hope you enjoyed this under 5-minute recap of the 2024 U.S. equity markets. Watch for updates throughout the year as we continue to see what kind of year 2025 will be.